So I'm getting a lot of questions that, Pejjy man, is it too late to buy the stock? The stock has gone up 26% in 2 days, slapping on $200 billion of market cap. Stock going from 210s to the 270s almost. It went up way too quick. Is it too late to buy? Did I miss the train on this? And, when people ask me this, I look at them like, do you not look at the stock? Do you not look at the charts, like, the 5-year charts? Because I read it on my X here that if you think you have missed out on Tesla, think again. The stock is still down over 36%, well now about 33%, since its all-time highs. You're not missing anything. Guys, it's down 30% from its all-time highs. Now, if this was all-time highs like how Nvidia is, okay, I may have to step back and say, okay, maybe, okay? But this is a company that it's 30% away from their all-time highs. I mean, you're not missing out on anything. If anything, this will be a good time to buy more. I'm not not financial advice, not investment advice, nothing. But that's how I feel. Yeah, it went up 26%. You missed that boat. It's still 30% away from the all-time highs. I also wrote here on my X saying that many are asking me if buying Tesla stock at these prices are a good idea. I've always said this. Buying Tesla below $400 is fair. Buying Tesla below $300 is cheap. Buying Tesla below $200 is criminally cheap. P.S. It's looking like buying Tesla below $400 may be getting cheap soon too. Not financial advice, not investment advice. Nothing, none of that. But I've always been saying this for the past 2-3 years, and I'm going to continue to be saying this. And we will see what's going to happen next year in 2025. We could potentially hit all-time highs by the end of 2025 if things go according to plan. Crazy that everyone thinks it's just too late. It's not too late. If your investment horizon is until 2030, let's say, man, this is probably a good time. Not financial advice, but probably a good time to buy more shares. Or if you're like someone who can't stomach volatility and, want more certainty, well, we kind of got it in Q3, how certain things are. So that's all I'm going to say there with that. But I do want to go over AJ's little argument, not argument, but his post here on how it's not too late to buy the stock. And in fact, it's pretty early. So let's get down to it. Smash that like button if you haven't already, because this is going to get really flippin' juicy. So AJ, he says that this is arguably the most important chart for Tesla investors to understand. It also explains why Tesla is poised to double in the next 12 to 18 months. The stock is 260 or 270. That means over $500 per share at 12 to 18 months. This guy is saying that he has his analysis are flippin' bomb. And he's saying how this thing could double. And you're telling me it's too late? Let's continue. Number 1, the chart shows the implied PE ratio for Tesla based on Tesla's next 4 unreported quarter. In other words, this is the resulting PE ratio if consensus estimates were 100% correct, true PE. 2, you can see that over long periods of time, Tesla was valued mostly at or nearly 71 times later actually delivered earnings. If you take a look at the chart, this is the forward PE. You guys can see that 71. It's literally right there. It's literally the medium. By the way, guys, when the forward PE was around like 30, back end of 2022, beginning of 2023, comment down below if you guys bought that stock. That was around $100 per share. It's incredible how cheap that was. But this is what he's talking about. Number 3, this demonstrates that Tesla has been trading at a significant premium. Even most high-performing tech stocks trade only around 35 to 45 times. We can call this valuation outperformance or premium, the Tesla or Elon premium or TP. And just for the record, guys, Tesla is always going to be trading at a premium. If you ever see Tesla not trading at a premium, it's cheap. It's cheap. That's all I'm going to say. Moving on. Number 4, as long as Elon runs Tesla, it appears unlikely that TP will go away. Both small and large investors recognize that it is unwise to bet against Elon. They're learning this now. But you gotta learn, man. Investing with Elon tended to be the winning strategy, and in the long term, that's always the case. Never bet against Elon. Invest in him and his companies. You're going to do very well long term. You're going to do extremely well long term. Just look at all those companies. Yes, they're all private except for Tesla, but just look at them long term. You're going to be very wealthy. We're going to look back 10, 15 years from now and say that, wow, that was an opportunity of a lifetime. I'm just saying. Number 5, the key insight is that any amount of incremental Tesla earnings is valued extremely highly. Example, near 71 times mark across most trading days. Number 6, this implies that as soon as incremental energy storage earnings earnings from the upcoming lower cost vehicles, or even the first FSD earnings are being included in estimates that the share price impact will be significant. Now, to a limit, Tesla does trade at a premium because it has all these other things, but I don't think it's been priced in fully. Only a little bit, in my opinion. Number 7, to double in market value, example, to go from now 800 billion, not 700 billion, to 1.4 trillion, Tesla only needs to generate approximately $1.42 per quarter in EPS estimates. So that comes down to about $5.70 as a fiscal EPS, which I think that could probably happen by end of 2025 if things go correctly. He says, given the following: number 1, new lower cost vehicle launch. Number 2, energy storage growth. Shanghai about to launch Megapack factory production early 2025, which is a big deal. Number 3, FSD starting to impact profit and loss. And number 4, continued global EV adoption. It appears highly likely that in 1 year, August 2025, the then next 12 months EPS outlook will have increased to on an average EPS of $1.46 per quarter. This would imply a doubling in share price or 100% return over the next 12 to 18 months. So he's talking about by August 2025, because of forward is market forward looking. The market is forward looking. They're going to have a higher EPS outlook because they're going to be looking into 2026 and a little bit in 2027. And the market will expect Tesla to do $1.46 per quarter. So they bring the stock price up to that. And I 100% agree with him because that's how the markets work. He continues and says, this is based on the key insight that Tesla retains during most trading days a significant premium. Lastly, I would discourage investors from using a fundamental cash flow analysis like the DCF or discounted cash flow, since on the basis investors consistently miss out on stocks like Tesla. A DCF approach eliminates any high permanent PE stock, i.e. the investor's hurdle rate can't be justified in most cases. What he's pretty much saying is that, hey, look, Tesla is a premium stock and it's always going to stay a premium stock because they're full of innovation. They're full of just reinvesting back in the company. So giving this company a low PE does not make sense, and it's always going to be trading at a high PE until those things become fulfilled. Robotaxis happen, FSD happens, Megapack at full production, Optimus in. Until those happen, and by the way, when those happen, Tesla's going to be worth tens of trillions. Then we can talk about the PE being in the low, maybe 25, 30, 20, depending how crazy growth is going to be. But until then, Tesla's always going to be trading at a high PE. So when you guys comment to me on Twitter or even on YouTube here saying that,
but Pejjy, the PE is 100, man. I can't buy a PE that's 100.
But then the stock keeps going higher. But then the stock doubles within a few more years. That's because it's most of these things are slightly priced in. Tesla stock will always be trading at a premium because they're, again, full of innovation and just reinvesting back in the company. And not to mention with Elon Musk and stuff like that. This is something that we've never seen before in the investment world. I'm just going to say that right now. I've been in the stock market for over 10 years now, and I haven't seen anything like this. Apple was not like this. Well, Apple a little bit was like this. Not to the extent of having PEs of 100, but Nvidia is like this. Palantir is like this. This is what's happening when we are seeing a company that's going to generate a whole bunch of money with high profit margins and with a whole lot of things that's going down. And the thing is with Tesla, all of the things that they're doing is a proof of concept. The proof of concept has already been done. For Robotaxi, look at Waymo. Just recently, they raised $6 billion for Waymo. Imagine what that means for Tesla. Waymo is not scalable. Waymo is not practical. Per each vehicle is about $180,000 and you get all these freaking LiDARs and cameras and sensors. It's just not practical and scalable. And eventually I think Waymo will have to get the licensing from Tesla if they want to scale or even be in business, because according to Elon, Waymo services is slow and they're expensive while Tesla is going to be fast and cheap, 20 cents per mile. You can't compete with that. I'm sorry, but in a city like San Francisco, when Cybertrucks are there or Cybercabs are there, and I see the price differences, RIP Waymo, man, I just don't know how they're going to compete. But that's just one example. And Tesla will be doing this with 80% gross margins. Oh my God. So the next time someone tells you that, Tesla is trading at a high PE of like 100 or something, it doesn't mean anything. You just slap him in the face and say, yeah, they have a lot of growth. They have a lot of things that's coming for them. And it's always been trading at a high PE. always. And when they weren't trading at a high PE, it was the greatest opportunity of a lifetime. Hence 2022, 2023, when the stock was around $100 per share, I dumped all my savings at that time. And just literally earlier this year, when the stock hit 140, I put a whole bunch of batch there as well, because it was just so flippin' cheap. It's insane. And you guys know this if you guys have been watching my channel for a long time. I'm just banging on this table, and that's what I've been doing. So it's a sheesh moment. Tesla will always be trading at a premium, period. Now, Pejjy, man, come on, be honest. Give me the answer. Is it too late or not? Even though I've already answered this in the beginning of this video, it's not too late. This is the beginning of the next growth phase, guys. The next stage of the next growth phase. How is that too late? It's not too late. In fact, in my opinion, once Trump wins this election, $300 range is the new $200. That's all I'm going to say. Now, again, the stock raged like this because Q3 earnings was absolutely a sheesh moment. Now, a lot of Wall Street analysts and a lot of bears, they're eliminated for this year. All the gains that they made is just completely erased in just one day, which is just incredible. But Wall Street analysts are now waking up and just saying, okay, we got to reevaluate this company once again. And this is what they got to say about it. RIP bears, but the analysts are just insane. Check it out, guys. You won't be disappointed. Subscribe, guys. Get your About the Dip t-shirt. And I shall see you guys in the next video. See ya.